The day trader's main working tool is the chart or graph. A chart's function is to present the stock's price history to help you determine the stock's future direction. Think of it as a financial crystal ball in which there is no present and only the past exists. A nanosecond beforehand is already the past. A second forward is the future. When deciding whether to buy or sell a stock, you cannot be satisfied with only the current price. You must review where that price came from before you can decide which direction it is heading. For example, you need to know the price at which sellers stopped its rise in the past, resistance lines, and at which buyers saved it from crashing, lines of support. Using this and other information, you need to determine how the stock will behave in the future and at what prices certain actions might occur. Day traders use as many charts as their computer monitors allow to follow the various stocks, sectors, and important market indices. Day traders most frequently use daily charts and intraday charts. Daily charts are those that display data in one-day intervals of time. They're used to examine a stock's daily behavior over periods of several days, weeks, or even months. For example, a daily chart for the months of June and July would include 61 data points, with each point representing one day of trade during the 2-month period. Intraday charts display data in much shorter intervals, such as 5 or 15 minutes. They are used to examine a stock's within-the-day behavior over periods of just 1 or a few days. Traders also can create weekly charts that display data in week-long intervals over periods of months or years. These charts give traders a look deep inside the market and the ability to trace the price changes, which are the outcomes of the constant tug-of-war between buyers and sellers. Stock prices do not rise or drop coincidentally. Several accepted norms exist for presenting prices on charts. Different traders choose different methods, but most of them, especially day traders, almost exclusively use the Japanese candlesticks method, which will be discussed in another video.
Thank you for watching. Click on the subscribe button to never miss a new post on Stock Market for Beginners. Follow me on Instagram, YouTube, and Twitter. Comment "I want my book." I will share free book and newsletter with first 100 subscribers and followers. Goodbye.